Let's talk about one of trading's biggest, most dangerous traps. It's a paradox, really, how the thing we all want, total freedom, can actually be our worst enemy in the markets, leading to absolute financial disaster. So, why is that? It's a wild question when you think about it. The very freedom that attracts us to trading, the idea of being your own boss, calling the shots, that's often the exact thing that leads to ruin. To really get why, we've got to take a step back and look at the world we've all been raised in. And that world is basically built on one thing: rules. It's our social blueprint. I mean, seriously, think about your entire life. From day one, we're taught how to operate in a world that's just packed with structure. Our parents give us rules, our teachers give us grades and deadlines, our bosses tell us what to do. Everything has guardrails, rules, rewards, punishments that guide us and, honestly, keep us from going completely off the rails. But then you step into the market, and it is a completely different universe. It's not a structured city, it's more like a wild, untamed wilderness. And out there are no rules. And this, right here, just lays out the massive disconnect. Society is all about structure, external rules, defined limits. The market? It's the total opposite. It's unstructured, there are no rules, and the potential for anything, good or bad, is basically unlimited. All the responsibility is on you. The mental tools that help you succeed in everyday life, they can become your biggest weaknesses in the market. And that's the nature of this wilderness. The market never stops. It's always moving. A trade doesn't have a clear beginning or end. It only stops when you say so. This means, yeah, there's unlimited potential to make money, but there's also unlimited potential to lose it. You have to make up your own rules because no one else is going to give them to you. It's complete freedom, and that is terrifyingly dangerous. So you can probably see where this is going. What happens when our brain, which is wired for structure and rules, gets dropped into this chaotic, ruleless environment? Well, we walk straight into a huge psychological trap. So let's ask that question directly. What are the actual consequences when a mind that's been trained its whole life to follow rules is suddenly left to its own devices in a place with absolutely no structure? Well, the result is something that the great trading psychologist Mark Douglas gave a name to. You become what he called a passive loser. Let's walk through what this looks like. So you buy a stock, let's say it's HDFC Bank, and you're feeling great about it, but then it starts to fall. Now, what does our normal, socially trained brain do? It waits. It hopes. We think, oh, it'll come back. 'Cause in life, waiting sometimes works. But in the market, waiting on a losing trade is poison. Doing nothing feels safer than admitting you were wrong, right? So you freeze. Your hope turns into fear, and that fear turns into paralysis. And all the while, the market doesn't care about your feelings. It just keeps moving, and your losses just keep getting bigger and bigger, all while you do nothing. And here's the truly dangerous part. This isn't like a poker game where the hand ends and you know what you lost. A losing trade can bleed you dry forever. You literally don't have to do a single thing to keep on losing money. You can just sit there, paralyzed, and the market will happily take everything you've got, and then some. So, here's the bottom line. In our normal lives, all those external rules and structures are there to protect us from ourselves. But in trading, those protections are gone. And that total freedom allows our own psychology, our fear, our hope, our ego to run wild and lead us straight to self-destruction. Okay, so that sounds pretty bleak, I know, but if the market doesn't give us rules, what's the answer? Well, the solution has to come from within. You have to forge your own internal compass. And it all starts with this simple but profound idea from Mark Douglas. The one thing you can control is yourself. That's it. You can't control what the market does next. Nobody can. The only thing you ever have control over is your own actions. So what does that really mean? It means that because the market provides zero external structure, you, the successful trader, have to build an internal one. The job of creating boundaries and rules moves from the outside world directly into your own mind. So what does this internal framework actually look like? Well, it means you decide exactly how much you're willing to lose before you even click the buy button. It means you create your own crystal clear rules for when you get in and when you get out. And here's the hardest part. It means building the raw discipline to stick to those rules, no matter how you're feeling. It's about accepting that you can be wrong and learning to take a small loss quickly before it becomes a disaster. You have to become your own boss, your own risk manager, and your own toughest critic.
At the end of the day, it all boils down to this. Success in trading isn't about having a crystal ball to predict the market. It's about having the discipline to manage yourself.
So we'll leave you with this thought to chew on. In an environment with no rules, the market acts like a perfect mirror. It doesn't reflect your analysis or your strategy, it reflects you. It reflects your discipline, your fears, your greed, your patience. So the real question isn't, what's the market going to do? The real question is, when you look in that mirror, what does it reflect about you?